This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's imports of crude oil rose 5.1% in the first 2 months of 2024 from a year earlier, data showed on Thursday, as refiners ramped up purchases to meet fuel sales during the Lunar New Year holiday. Imports during January and February amounted to 88.31 million metric tons, or about 10.74 million barrels per day, BPD, according to the General Administration of Customs. That compared to 10.4 million barrels of oil per day in the corresponding period last year. China releases combined import data for January and February to smooth out the impact of the week-long Lunar New Year holiday that typically falls at the start of the year.
India's fuel consumption rose 5.7% year-on-year in February, government data showed on Thursday, helped by strong factory activity in the world's third biggest oil importer and consumer. Total consumption, a proxy for oil demand, totaled 19.72 million metric tons, 4.98 million barrels per day, in February, up from 18.66 million tons last year. Data from the Petroleum Planning and Analysis Cell of the Oil Ministry showed. Demand was up about 5.1% on a daily basis from the 4.74 mbpd, 20.04 million metric tons, consumed in January.
Moving on to the top news in the energy sector.
A panel of officials from Indian ministries has called for a bigger carbon tax on high-quality imported coal while cutting rates for domestic coal, in a bid to slash shipments of the polluting fuel, the coal ministry said on Thursday. Coal is among India's top 5 commodity imports by value. Despite surging domestic production, mainly of low-quality coal with high ash content, it has failed to cut back on imports and ranks as the world's second-largest importer. In its report to the coal ministry, the panel said the current carbon tax rate of 400 rupees, $4.83, on every metric ton of coal, regardless of the quality bought, favored imports and hit sales of domestically mined coal.
Oil prices slipped on Thursday as expectations that U.S. interest rate cuts could be delayed capped gains. Though upbeat Chinese trade data augured well for demand in the world's top oil importer. Brent crude futures were down 34 cents or 0.4% to $82.62 a barrel by 12:42 GMT, while U.S. West Texas Intermediate crude futures inched down 29 cents or 0.3% to $78.84 a barrel. Oil prices retreated from near a 2024 high hit on Wednesday after U.S. data showed oil stocks rose less than expected and fuel inventories fell, in a sign of robust demand. Next, we have the top news in metal markets. China's iron ore imports in the first 2 months of 2024 climbed 8.1% from the previous year as steelmakers restocked to meet production needs during and after the week-long Lunar New Year holiday. The world's largest iron ore consumer brought in 209.45 million metric tons of the key steelmaking ingredient, a record high for the 2-month period, customs data showed on Thursday. The number works out to a monthly average of 104.73 million tons, versus a monthly average of 98.39 million tons in 2023. That compares to 100.86 million tons imported in December.
Copper prices touched their highest in 5 weeks on better-than-expected trade data in top metals consumer China, while zinc also surged due to a cut in output at a major South Korean smelter. 3-month copper on the London Metal Exchange gained 0.8% to $8,646 a metric ton in official open outcry trading, the strongest since January 31st. Data showed that China's export and import growth in the first 2 months of 2024 beat forecasts. The Chinese trade data was quite good, with exports being strong. Copper imports were up as well, so it looks like demand is doing all right actually, said Dan Smith, head of research at Amalgamated Metal Trading.
We will now look at the top news in the agricultural sector.
Soybean imports for top oilseed buyer China fell to a 5-year low for the first 2 months of the year, weighed down by poor crushing margins and fewer ship arrivals during the Lunar New Year holidays. Imports for January and February combined were at 13.04 million metric tons, down 8.8% from the same period a year ago, according to the General Administration of Customs. The imports are the lowest for the period since 2019, according to Reuters records. China Customs also reported revised soybean import volumes for January to February 2023 to 14.30 million tons, versus an initial published figure of 16.17 million tons. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.